Hello, everyone. Welcome to the live stream. I'm here to do a real quick analysis on the short term signals here on Bitcoin. Of course, before I get started, everything I say is not investment advice. It's for educational purposes only or entertainment if that's your thing. So I'm just going to go ahead and get right into it here. I want to take a look at couple things that I've been noticing, and I'm just going to point out a few things. I'm going to talk a little bit about divergence, which is something that I've talked about previously on the Discord server. If you're not a member of the Discord server, we'd love to have you there. But I'm going to be focusing on again, just keeping it really quick and to the point here, short term, looking basically at just the last week or two here. And so I want to point out here we had our high here at 40.38. We had a higher high here at about 40.6750 or so. And basically what we've seen with that is we've seen a higher high. And then if we take a look here at some of our oscillators, we're seeing that we had a lower high right here. So this is our MACD histogram, which I've sort of turned into an area chart. It seems to look a little better. Of course, if you wanted to change these around, you could easily just go into the setting and change your MACD back to look like a histogram, which is sort of what a lot of you are used to seeing. I do prefer to see this as an area. It's a little easier to see. Columns does tend to also be something that other people are interested in seeing. It shows the more precision for each level. But I'm going to stick with my area on this. Of course, a higher high on the price and a lower high on the histogram means there was a lot less momentum in the move to get a higher price, which is generally a bearish symbol. It took a lot to get it up to here, and then it took just a little bit to get it a little bit higher. And that generally means that, all of the smart money put all of their push all of their momentum in these lower price points, and then it's a lot of retail money doing a lot of sideways movement and with a lot of optimism, able to get this price to go up a little bit. And then at that point, that's where bears take control. They start taking profits, and then of course all of the traders, you start to see some stop losses kick in, and people selling for a loss that bought all the way up here, and that's what gets us down. And so this is the confirmation of the divergence. So that's on a 4-hour time frame. Again, a higher high on the price with a lower high on your MACD histogram. That's a good case for some bearish divergence. We're just now kicking into a new 4-hour block that's just recently started here. We're about 3 minutes in or so, and we've already seen this kind of bounce around just a little bit. 39.11, 39.1150. So I want to focus here on a 15-minute chart, and I want to take a look at what's happening here on a lower level. I'm going to zoom in just a little bit more because I also saw a very similar indication on the 15-minute chart. Of course, when you see bullish or bearish divergence on a higher time frame, like a daily or a weekly, generally speaking, you can expect that swing to last much longer. I have seen bearish divergence here on the 15-minute time frame. That doesn't necessarily mean that we're going down to 3,000 or the abyss right now, but what I can say here is we've seen a higher high on the price, we've seen a lower high on the MACD histogram. So this again is bearish divergence. There was a little bit of a rejection here, but what I have seen is in some of these formations, some of these patterns, there's a few things to make note of here. And again, we're looking at a lower time frame. If I pull in my Fibonacci retracement and I move from this pivot low to this high right here, you'll notice that we got a nice bounce here at the 61.8%. And, we've gotten almost all the way back up and we're getting close to 39.20, but we had a rejection there at 39.1850. So seeing a little bit of a rejection. We're seeing some crosses on some of these moving averages. So it's possible that we could see some support here. But the most important thing is where we're seeing our resistance. So let me remove my Fibonacci and kind of clean up this chart just a little bit. What we're seeing, and I'm going to try and illustrate this with a neat horizontal line, this point right here, which I'll highlight in yellow to make it, again, a little easier to see. Let's just pay attention to this because we've seen support here, we've seen support here, we definitely saw some support here, but now that we've fallen through that, we're now seeing resistance, resistance. Now, the more that that level is tested, the lower the probability of it continuing to hold will be. But the fact that there was a little bit of a divergence that we just saw here leads me to lean slightly bearish until we're able to cross through the 39.20 mark. If we continue to close below 39.20, that's going to continue to be bearish for me. We're very close to that. So I'm looking for a 1 hour to a 4 hour candle to close above that. Before I start to think otherwise. Otherwise, I'm seeing this as a potential double top, and maybe a rejection is going to ensue from here. Maybe we'll bounce around in this area for a little bit longer. We have seen long periods of consolidation that last for days, maybe even weeks. Not saying that's going to happen here. I'm just saying that we have seen it. So continuing to keep an eye out here, watching to see as things progress. Again, 39.20 is probably going to be my area to pay attention to. As long as we continue closing below that, I am going to lean bearish. So, okay, I'll leave you with that. Thanks for joining, and I'll talk to you all later. Have a good day, everyone.